All right. Hopefully y'all can hear me just fine. I'm attempting to set up over here on TikTok. This is my first time going live on TikTok. Um, is this okay? I can't do it right now. Is this talking about you gotta go through all of this to go live? Like what is going on? Like I've never gone live on TikTok, y'all. So just please bear with me. You know, please bear with me. This is my first time going live on here. And I've been having some issues with StreamYard in my slides. So I have some slides that I want to share with you guys because we're going over a couple of things today. So yeah. But hey everybody. Hey. I'm excited. I've never been live on TikTok before, so this is definitely a first. Okay, so listen, let's get into it. Let's get into it. Because I am late, like I said, having those technical difficulties with StreamYard. For whatever they normally, I'm able to share slides easily, normally with StreamYard, but for whatever reason, this time it's like it's not letting me move forward. And I only have 5 slides. That's the funny part. I only have 5 slides and it won't let me use it. But nonetheless, we're gonna move forward. Thank you all so very much for jumping on here on YouTube. Okay. I really appreciate y'all. If you are new to this YouTube channel, y'all, first of all, welcome. If you are new to me on TikTok, welcome. And go ahead and tap, tap, tap real quick. Just tap, tap, tap real quick. Get some likes on here. And I definitely want to say thank you so very much for everyone who has been here and is coming back, especially for part two. Part one of this series was a lot to start off talking about the trading plan, then coming back for part two. And now we're going to be talking about risk to reward, risk management. What does that look like? How can we really implement our risk management plan into and incorporate it into our trading plan? So that's what we're going over today. I am really looking forward to this because I have slides that I want to show you all because I know I've talked about risk management. I've talked about risk to reward over and over again. And this time I'm like, nope, I want to bring something, a visual for you all to be able to screenshot and then actually give you some exercises, examples, and whatnot for you to practice. Okay. So hit the like, hit the thumbs up. My bad for YouTube. Thumbs up, thumbs up, thumbs up. TikTok, I need y'all just tap, tap, tap for me, tap, tap, tap for me, tap, tap, tap. I really appreciate y'all on the tapping. So this way we can make sure everybody knows that we're live, we're ready to go. Okay. As you all jump on, do me a favor and put your city, put your state, put your country. If you are not in the United States, put your country in the chat. I really want to see it. I'm sorry, y'all on YouTube. I can't see you because, like I said, I'm looking through Zoom. So, bear with me, y'all. I'm sorry. StreamYard messing up for me. But I see you, Teresa, and 777_15. Thank you all so very much for joining. So we're going to get into it. Before we do it, though, before we talk about this topic, I want to make sure everybody is well aware, for those of you that are new to me, and especially given this is my first time going live on TikTok. If you're new to me, y'all, I am not a financial advisor. I am not a licensed trader. I've said this multiple times, but I have a bunch of people who are new to me. So, I want to make sure that everybody understands when I talk about these things, talking about my strategies that I use as a trader in these different markets and definitely as an investor as well. Y'all, I'm speaking from the perspective of a student. I study these things. I practice these things. I apply these things. Therefore, I get the results. So if you have is it a way to tap it on here? Yeah, I'm so sorry. I'm trying to figure out how to use TikTok live. So forgive me, y'all, if I don't have it down. Okay. This is my first time doing TikTok live. So just bear with me. I appreciate y'all for bearing with me. I wanted to make sure that everybody is aware with this skill, y'all. This involves risk. Trading is not for the weak. Investing is not for the weak. It's not for the finicky. It's not for those who are like, oh man, like I mean, I know I want to do it and so on and so forth, but I'm gonna tell you something, y'all. Like we really have to make sure that we are mentally prepared for what comes with trading. So it is high risk, and everything that I share with you all today, for those of you on YouTube, for those of you sticking around on TikTok, everything that I share with you all today, please make sure you do your own due diligence and do your own research. Then make a decision on how you want to move forward, because this is not a one size fits all. Okay. Anything that I share pertaining to trading and investing is not a one size fits all. Okay. So hopefully everybody got it. I'm sorry, y'all, again on YouTube. I cannot see your comments. So as you're tuning in, I just want to say thank you. StreamYard tripping on me with the slides. So normally that's who I use, but I have to go through Zoom right now to get to y'all. Okay. So let's get into it. I'm going to share my screen here in a minute. But before I share my screen, and just so y'all know, I'm bouncing between TikTok and YouTube, okay? Since I can't, you know, do all of them on one streaming service. All right. So just so we know what's the purpose of this series. So remember, this is our trading survival guide. We're going into 2025 because this year is wrapping up. We want to go into 2025 properly prepared. We want to be equipped. All right. There's going to be a new president. This new president has a different agenda from this last president. So we need to make sure that we're able to pivot accordingly and still make money, all right, and not go out here and blow our accounts and lose money unnecessarily. So in this entire thing, what I want to do is what is this? What I want to do is make sure that you all are aware of some of the common pitfalls. Sorry, y'all, like I said, I'm doing two things at once. I'm new to I'm new to TikTok, y'all, so just bear with me, okay? So yeah, so I just want to make sure that you all are aware of some of the common pitfalls. I want you all to avoid those things, right? And I want you to be in position to really establish like a strong foundation when it comes to preparing to trade in 2025, okay? In this series, it was supposed to be just 3 parts, y'all, but I realized as I put it together, I'm like, yeah, to keep it 1 hour, it's probably gonna be like 4, 5, maybe 6. It depends. So we'll see how this goes. I just really appreciate y'all continue to tune in. Make sure you all hit the thumbs up on YouTube, TikTok, hit the screen, just tap 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 a couple of times, okay? Yeah. So in this series on part 1, we talked about our trading plan. How do we create that? If you watch part 1, then that means you took screenshots. You should have, right? Taking some screenshots. You have a better understanding of it. TikTok, this is my first time going live, y'all. So if you can just tap the screen a couple of times, just tap, 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 while you're doing something else, just go ahead and tap. That's what I do every time I watch somebody's live. You know what I'm saying? I just tap away, and then that lets them know, hey, I'm here. You know what I'm saying? I got your back. I'm supporting you. Okay. But part 2, we're going to talk about risk management, because this is key, y'all. Risk management is key. It's not just for trading. Risk management applies to investing. So if you're a person that's investing in the stock market, if you're investing in the real estate market, if you're investing in precious metals, if you're investing in like oil, if you're investing in cryptocurrency, where my crypto traders at, right? Where my crypto investors at? Y'all know YouTube definitely know. TikTok, y'all might know. I don't know, how many of y'all been rocking with me for the past like 2 years that I've been on TikTok, but I'm heavy crypto. So I've been heavy on talking about and educating people on cryptocurrency because I've been in the space since 2017. So here's the thing. I want to make sure that we are properly equipped. That's the whole reason for talking about risk management in detail and over and over and over again, because it applies to everything we do in life, not just trading and not just investing, right? And then part 3, what we're going to attempt to cover, okay? We're going to attempt to cover, my husband got it on Westerns and they sitting here shooting and stuff. uh, so we're going to attempt to do is get into some market analysis so that way people have a better understanding of it. And I'm sorry, y'all, I'm attempting over here to get, you know, get this going, get this out here. So yeah, I wanted to make sure that we touch about some market analysis. Again, it's gonna be a little different than what I've talked about in the past because I want to do deeper dives into it. And then on top of that, the next part we're gonna go into a bit of trading psychology. If we can't do it in part 3, that'll be part of part 4. So trading psychology, giving you some techniques, right, on how you can control your emotions and of course avoid those impulsive decisions that cause you to blow your accounts, okay? Or to lose money when you're investing. And I'm talking about unnecessarily lose money because loss is part of the game, right? And then hopefully we'll be at like part 5 and I have to go into part 6. So if we have a part 5, then we'll go over, you know, some continuous learning strategies, talking about the smart use of leverage, and then also adapting strategies to different markets because what's working right now in 2024, all of it may not be applicable in 2025. Remember, y'all, that's not just for trading, that's for investing in different markets as well. So you take what you need in 2024, apply what's applicable in 2025, and you go out here and you make your money. That is the goal. All right. So for everyone, this series, the plan is for it to really equip you to, you know, trade confidently, of course, avoid those costly mistakes, right? And to develop a sustainable approach to trading. So whether you're new to trading or you just need a refresher, because I know some people out there need a refresher. If you need a refresher, this series will help you to trade smarter and also to be more consistent. If you're following me on TikTok, right, you probably saw the results from this month's trading so far. I know some people may say, oh man, it's only 5 trades. That is part of the problem with new traders or people who don't trade and they just don't understand. You don't need to have 20, 30, 40 trades in a month to be considered successful. I've had 5 so far this month, but I have not taken a lesson in the market, meaning I have not lost a trade this month. Which one do you think is better? Going 5-0 for the month or taking 10 trades and then you win 3 out of 7 trades? 3 out of 10 trades. Which one do you think is better? So you took 10 trades, but you only won 3. I took 5 and I won all 5. That makes more sense to me to look at low risk, high profitability setups than I just got to trade everything because I just want to make money, right? This is why we're talking about risk management today. So before I get into part 2, I want to do a quick recap, especially for y'all on TikTok, because I know this is my first live on TikTok. Man, can y'all just hit the tap, 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 tap. You know what I'm saying? Just tap a couple times. Tap a couple times. This is my first time doing the live on TikTok. So I would appreciate it for all of y'all tuning in right now. Just tap, tap, tap. You know what I'm saying? Give me a few taps, and then YouTube, hit the thumbs up. And y'all, everybody can share. This is a way to support because you're getting free information. So share on YouTube. Share it with 1 or 2 traders that you know. TikTok, same thing. Share with 1 or 2 traders you know. Or if it's someone that you know that you've been talking to and they're curious about trading, share it with them. Whether they watch this live or the replay or not, that's totally up to them. But at least you can say, hey, I shared it with you because I heard you talking about you want to know more about trading. This lady is on here talking about it. Hey, check her out, okay? Especially for those of you that are not following me here on TikTok or following me here on or subscribe to this channel on YouTube. You know what I'm saying? Like, just share it. And if they like it, they like it. If they don't, they don't. Oh, well. You know, it's all good. You've done your part. That's the biggest thing, okay? And then YouTube, don't forget y'all subscribe and hit that notification bell. Subscribe and hit the notification bell. TikTok, tap, 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 okay? All right, so let's get into the recap. We did part one. This was last Thursday, right? And I talked about a trading plan. So I talked about what it is, which for those of you that aren't aware, it's kind of like a roadmap. With anything that we do, we want to have some type of guide saying, I want to go from where I am right now to this destination. Well, we know we use GPS today. Our trading plan is like our GPS. We want to use that to help us to get to from where we are right now to our next destination. So if we're using this trading plan, it's going to help us to keep our emotions in check. It's going to help us to be consistent in the market because there are different components to our trading plan, which I talked about, right? And when we do that, now we see long-term profitability, meaning for those who are like, what are you talking about? That means we see money every single week, every single month, every single year from trading. Okay, that's the goal. So that's why you want to have a trading plan. Okay. Now, I also talked about, a couple of things. Like one of those is what's most likely to happen when a trader doesn't have a plan and they don't operate with the plan, right? Well, the tendency is going to be to impulsively trade, right? We know it. You go to the grocery store and you don't have a shopping list. What are you most likely to do? You're going to pick up stuff. That's called impulsive buying because you just branded. You're like, oh, oh yeah, I don't have that. Oh, I need that. Knowing good well is not on your list. But if you don't have a list, you're going to just pick up stuff because your brain is just saying, oh, I want that. It's the same thing with trading, y'all. We'll impulsively trade. We'll have that fear of missing out, right? And then the reason why we're going to be potentially losing when we don't have that trading plan is because we don't have a strategy. Because we know that part of our trading plan should include our trading strategy. So again, this is why I wanted to do this series so that way people who are trading, and y'all, this doesn't just apply to trading. This applies if you are an investor in other markets, right? You can use parts of what I'm about to share, especially today with risk to reward and risk management. You could definitely apply that as an investor, right? So I also talked about, how when we don't have a trading plan, that leads to us having increased stress and burnout. And you know what happens when a person is excessively stressed out and experiencing burnout? They're more likely to quit. How many of you know someone who used to trade? They used to talk about it all the time back in 2018, 2019, 2020, during COVID. That's probably when they joined some trading network marketing company. You know what I'm saying? So they joined during COVID and they were all excited about it and probably attempted to get you to come join their company. And then boom, out of nowhere, they start trading. This is why stress, burnout, lack of strategy, lack of planning, those things contribute to it. TikTok, do me a favor, y'all. Y'all are coming on. So go ahead, tap, tap, tap. If you're liking what you're hearing, tap, tap, tap. Share as well. Same thing with you on YouTube, y'all. Share, share, share. Sharing is caring, y'all. Sharing is caring. Someone share this information with me. Excuse me. Someone shared the information with me and at least piqued my interest into trading. I took it and I ran with it, and then I got the results, and now I'm doing the same thing. I'm paying it forward. Okay. So share, share, share. Whether the person watches this live stream or the replay or not, just do your part and share. Okay. That's a really great way to support a person who's wanting you to win and is willing to share free information with you so that way you can win. Okay. And again, this doesn't just apply to trading. This also applies to you if you are investing in other markets. All right. So now I also cover a few core elements of a trading plan. We talked about your entry and exit points, right? We talked about that. We talked about how you're going to identify your entry and exit points, possibly by looking at the news, currency strength. For my people who trade in the FOREX market, we talked about support and resistance levels, how that applies. We talked about market breakouts. We talked about your technical indicators because everybody trades different. So you can use different technical indicators to help you to decide if you're going to enter a market or you're going to exit. Again, this doesn't just apply to trading. because people that invest, some of them use specific indicators to confirm to them, yep, I'm definitely about to start buying some shares in Apple, or I'm about to start selling some of my shares in GNL, right? Whatever it is, okay? We talked about our profit targets, how that's going to help us to determine if we're going to exit the market, okay, or enter a market. We talked about a stop loss, our safety net, right? I'm going to go into that again here soon, so I don't want to dive into that. We talked about time-based exits. We talked about risk management rules. We're going back over risk management again today because it's super, super, super important. We talked about goal setting, as well as I gave y'all step by step on how to set up your trading plan. And if you did the homework from last week, that means that you more than likely had the screenshots and you have completed or updated your trading plan based off of the lesson last week. If you did your homework, y'all, do me a favor. I know I can't see it right now, but I'll be able to come back on YouTube and and comment. But if you did your homework, type the word homework in the chat for those of you on YouTube. Type the word homework in the chat. If you did your homework from last week live, type the word homework in the chat and I'm going to shout you out, okay? After this live stream is over, because again, I can't see y'all. I'm sorry. I'm on Zoom. StreamYard tripping. All right. so yeah, and then the last thing we covered in that part one was the 6 reasons that we want to exercise discipline. Okay, when we're following our plan. Like, what happens when we follow our trading plan? This is what happens when we follow our plans in general, not just trading plan, but also our plan to invest, our plans for our family, our health plans, all of that. Number one, it prevents us from emotionally making decisions. Okay? We're going to make decisions based off of results, facts, strategy, whatever it is, right? That's number one. The second thing, when we stick to our plan, the second thing is going to help us maintain consistency. This is how you get long-term success. The people who are successful in life, they have a routine. They have a standard. We need to have the same type of standard and routine when it comes to trading and investing, right? So TikTok, y'all go ahead, tap, 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 tap. I see y'all on here. Tap, 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 tap. Okay. Then the third thing is when we use our trading plan, right? The third thing is going to help support effective risk management. Because we're applying it, we see the results, so we're more likely to what? To continue to do it. And also, it's going to build confidence and resilience. It's going to help us to be able to identify our performance. Like, we can evaluate ourselves and pivot and adjust where we see necessary, right? And the last thing is going to prevent that burnout and stress, or at least reduce it to an acceptable level, right? To where it's not going to cause us to want to quit. We could just, use that stress and whatnot to move forward, okay? So those are the things that we talked about on part one. Now we're going to get into part two, y'all. This is the time. This is the time. If you have not done it yet, YouTube, if you have not done it yet, TikTok, y'all grab you a pen and a piece of paper. If you are watching me on your laptop, like if you're on YouTube and you're watching me on your laptop or something, if you're on TikTok, I don't know if y'all do that on TikTok, but but this is the time, y'all, to get your phone and pull up your notepad on your phone, or you take notes on your phone like I do. I'm one of them. I write stuff down, but I have my phone with me everywhere. So if it's something important, I'm like, oh, let me just type it in here real quick and my notes, right? That way I could just easily go back to it and whatnot. Take screenshots, okay? Especially you all here on YouTube, when it's time for me to pull up my slides, y'all will be able to use that, okay? So you'll be able to do that. So let's go. We're going to get into the fundamentals of risk management. Again, y'all, this applies to everything in our life, okay? Not just trading. Take the parts that apply to your life and use it, okay? If it doesn't apply at this time, that's okay. It may apply a bit later. All right, cool. So let's get it. So the first thing we're going to talk about is understanding risk in trading. Right now, we're going to talk about trading. every single person who trades or is considering trading must know or should know, right, that every trade involves a level of uncertainty, and this is why we talk about risk management, or we use the term risk management, because there's no guarantees in trading. There is no guarantees when you're investing. If you are a person on TikTok right now and you invest in the real estate market, is it a guarantee that you're going to be able to turn a profit when you flip a property? The answer is no. Is there a guarantee that whatever stock that you are investing in, companies that you're investing in the stock market, is there a guarantee that you're going to make money in that market and on a certain, in a certain amount of time? The answer is no. Is there a guarantee that you're going to turn a massive profit when you're investing in the cryptocurrency market? For my people that's been talking about, I'm about to buy Bitcoin right now. We hit 97,000. You know what I'm saying? Why are you going to buy at the high? Is there a guarantee that you're going to make a massive amount of money if you start buying Bitcoin right now? There's no guarantee in anything. There is risk associated with everything in life. There's no guarantee when you leave your home today and go to the grocery store, go to work, whatever. There's no guarantee that you're going to make it back home. That is a risk that we all are willingly taking every single day. Everybody got it? So we need to be aware of the risks. When we're aware of the risks, now, okay, how are we going to maneuver around that risk? Well, in trading, what we're going to focus on is establishing a really solid risk management plan. So that way we focus on protecting our capital. That means the money we put into our broker accounts, the money we put into, in other terms, for people who are not familiar with trading, a broker account is like your bank account. Okay? If someone else has control of it, but you put your hard-earned money into it with hopes that they execute on what you want them to execute on your behalf, right? You tell them, enter me into this because I want to purchase this, and they're supposed to do it, right? Okay. So the goal for us is to establish a really solid risk management plan, execute on it, so that way we can protect our capital. That is our priority. And if you are new, the reason for this particular live stream is to make sure that it is ingrained and burned in your head that is your focus. Everybody got it. I hope y'all got it. Okay? So let's dig a little deeper into risk management. Y'all do me a favor, share TikTok. I see y'all on here. Tap the screen. Tap the screen. Okay? So let's dig a little deeper. We're going to go into a few core risk management principles, okay? It's not that many. We're not going to be on here long because I really want to get to the slides for y'all here on YouTube so y'all can see them, okay? So let's do it. We're going to talk about stop loss. Remember, I just kind of like went over it just a little bit, okay? I went over it for a second, but I talked about a stop loss because I want to make sure people are using this. I am an advocate for using a stop loss because the stop loss is like a price level that a trade is going to automatically close. So it limits your losses. Your broker, y'all, for those of you that are unfamiliar, your broker should be exiting you out of the trade at the price point you tell them to exit you out at. Because now this is like your safety net. The stop loss is going to prevent you from excessive losses in the market. And then on top of that, it's going to protect your account because now, hey, I said I only want to risk 1% of my account balance on a trade. Well, you establishing that stop loss, that safety net, right? You establishing that is going to help you do that. Okay? So the next thing that I want to just touch on when it comes to this whole stop loss thing is how do we set them? So as a trader, and I will say this, y'all, this applies in a sense to investors. There are going to be different things as an investor you're going to look for, but the overall theme is still similar. Okay, so with trading and investing, and that's in any market. All right, so we want to, number one, we can look at like key levels. So as an investor, you're probably looking at, who the CEO may be, what type of returns they're getting, what's their earnings and whatnot. There's a lot of things that you're looking at. There's gonna be a time where you may look at like, hey, I may look at a chart just to see, but for overall, I'm looking at certain documents. I'm looking at profit loss and all of that, right? Okay, cool. Well, for us as traders, we can look at the charts and we can say, hey, I'm going to place my stop loss below, let's say, the support. There was a support I'm buying right now. I'm expecting price to continue to go up. This is the support. So I want to put my stop loss below that. Okay, cool. Or you could put it above your resistance. Okay? Because you're like, hey, I'm expecting Bitcoin to go down 500 to 1,000 pips, right? Okay, well, this is the all-time high, which is a new form of resistance. 97,000 plus, right, is a new all-time high. So I want to put my stop loss above the all-time high. So if Bitcoin just turns around and says, no, I'm about to make another all-time high, okay, well, guess what? I'm comfortable with losing this amount of money, whatever it's going to equal. You're all going to learn that here in a little bit. Whatever amount that equals to for me, I'm comfortable with losing that if Bitcoin goes, instead of going down, comes back up and makes a new all-time high, right? Y'all, this helps us to minimize risk while also giving the trade room to breathe. Okay, so this is why I'm really big on risk management, and I'm really big on using the stop loss, because this is something that helps me to just go and live my life. I set my stop loss, I set my profit area, I tell the broker where I want them to kick me out of the trade at, and I go on and I enjoy my freaking day. Okay, who don't want to live a life where you can just put some numbers in and then you go on about your business, right? So this is the second thing. How we're gonna set our stop loss. This is the second thing you can do. You can actually use a percentage of your account and say, hey, I'm only willing to risk 1% of my account balance because I'm new to trading. So whatever that equals in a dollar amount, that's what I'm doing. There's no going above that. So if that means that 1% equals, let's say, a 25 pip for my people who are unfamiliar, points, right? If that's a 25 pip move stop loss, then guess what? I'm only gonna have a 25 pip stop loss, right? Okay. And then listen, this is the last thing I'm gonna say about the stop loss, okay? And then I want to just kind of give y'all a second to wrap your mind around this. The last thing I want to say is the stop loss is essential because it's going to help us, number one, to protect our capital. It helps to prevent large, unexpected losses because the market's going to do what the market's going to do. None of us can stop the market from making certain moves. We can't. Not retail traders anyway. The people with billions of dollars that they're pumping into the market, they're the ones that's making the markets move. Not us that is putting 10,000, 15,000, especially if you're putting $100 and $200 into the market. Y'all, that $100, $200 is not making the market move anywhere. Just so you know, it's the hedge fund managers, it's the corporations, it's the financial institutions, it's the Federal Reserves and whatnot. That's who's making the market move, not us with our few $1,000s. Okay. And even if you have like a couple $100,000 in the market, that's still not making it move because you have billions being put in by all of these different entities. Okay, so we want to protect our capital. That's what the stop loss does. It also helps to remove emotion. I just mentioned to y'all how I would set my parameters, meaning I would set my stop loss and I would set my profit area with my broker, and I go on about my day. Y'all, that is the biggest bit of relief for me, is being able to set my parameters and go on and live my life. I could go run my errands. I could go spend time with my family. I could go, you know, relax, get my hair done. I could go do whatever I want. And then when I'm done for the day, I could go check and see, okay, I made money, or oh, that was a lesson. All right, move on. Let's go next day. Right? And then the last thing using a stop loss does is it helps encourage us to be disciplined. You being a person that can set your parameters and go on about your day takes an extreme amount of discipline. Because I want you to think about this. It's easy for you to sit there and stare at your phone, stare at your laptop all day, every day, and then bite your nails, praying to God, come on, God, please turn the trade around for me. How many of y'all done that? Please, God, turn that trade around for me. I promise I'll follow my trading strategy next time. Who has done that? I did. Y'all, I used to say affirmations and everything before I traded. Now, granted, I still say that, but I don't say it when I'm in a trade. I say my stuff beforehand, like I say a prayer. I say my stuff beforehand, and then I go on about my day, right? But you have to have a certain level of discipline to say, I'm going to put this into the market and I'm about to go on about my day and not stress about it. That's what having a stop loss does for us as traders. And if I were you as an investor in a different market, whether that's stocks, real estate, whether you're investing in gold and silver, because I invest in those things as well, whether that's, you know, cryptocurrency, because I invest in that as well, you can use that same logic by using a percentage of your balance. Or say, listen, if this stock goes down 25%, I'm going to cut my losses and just go ahead and sell it. So that's like a stop loss as a stock investor. If you say, no, I'll give it some room. If it's 30%, okay, whatever your number is, the same rules apply though. Set that number, stick with it though. That is discipline, y'all. That's how people are able to consistently make money as traders and as investors. All right, everybody got it. Hopefully everybody got it when it comes to stop loss. If this is helping you, I need you to do me a favor. Number one, thumbs up on YouTube, TikTok, go ahead and tap the screen, tap, tap, tap. If this is helping you, if it made sense, I need you to tap, tap, tap on TikTok. If it made sense on YouTube, I need you to hit the thumbs up. On top of that, y'all, share this live stream, share this replay, okay? Share this with someone that you know is trading in the market or is considering trading in the market. Whether they watch it or not, y'all, is not your concern, okay? Just like someone shared information with me for free, and then I went and I applied and I got my results. Now I'm paying it forward by sharing with you. So now I want you to do the same, and that's pay it forward. Let's not sit here and be gatekeepers. Let's share, because that's what we need to do moving forward, all right? So that's it. We talked about stop loss. Now let's talk about the next key component here. Let's talk about the next core risk management principle, and that is position sizing. Position sizing. If you, excuse me, y'all. If you have tuned in to any of my previous series where we've been talking about trading, giving you blueprints for success, talking about trading trauma, all of this stuff, and now today giving you your guide to overcome some of these common mistakes, right? I'm talking about a lot size. Again, this applies from an investor standpoint as well. The terms are just going to be different, but I need you to follow me. Everybody ready? So we're going to talk about the lot size. As explained before, y'all, in Forex trading specifically, lot sizes are gosh, my throat. Come on, let's get it. Lot sizes refer to the amount of currency you're trading. This applies to you as an investor. How much money are you putting into the market? Are you comfortable with that amount possibly going away? If your answer is no, don't put that amount into the market, okay? So in Forex trading, there are three main lot sizes, okay? There's standard, mini, and micro. Now, what I want to share with y'all, though, is there's a fourth one, and that's nano. That is used by some brokers, but not all, okay? So the three main are standard, mini, and micro. I'm going to show you on the slides, so that way you don't have to say, I don't know what that means, though. I got you. You're going to see it on the slides, okay? Excuse me, y'all, because I'm about to go to the slides here in a second. So, with this, all right, when we're talking about this, they pretty much directly affect the size of our trade, right? And the level of our risk, okay? So the bigger the bet, the bigger the lot size, bigger the bet, bigger the investment, right? The more money you stand to either win or lose. How to determine the appropriate position size or bet is based on your account size and risk tolerance. This is why I said this still applies to other markets as an investor, but also other markets that you're trading. Because not everyone trades Forex, but I guarantee you what I just said applies to the stock market as a trader. What I just said applies to the cryptocurrency market as a trader. What I just said applies as an investor in the real estate market, investor in the stock market, investor in the cryptocurrency market, investor in precious metals. It applies. Risk management is not just for Forex. Risk management is for everything. Okay? So let me do this, y'all. Sorry. Yeah. It's just this thing, whatever it is. I'm not claiming it. I'm getting rid of it. It's getting out of my body, y'all. It's getting out of my body. Okay, so let's get to it. So let me share my screen. Here we go. Okay, so this is what we're going to do, y'all. We're going to go into lot sizes. So I know for you all on TikTok, if you want to jump off TikTok, you can come follow along so you can see the slides. Follow along on YouTube. That's Prosperity Calls. Go to YouTube and put in Prosperity Calls, and then you'll be able to see this live stream. Okay, so let me move this out the way so I can see. There we go. All right, so let's get into it. So our different lot sizes, y'all. Like I said, there's a total of 4, but the main 3 are used. This is here. Standard, mini, micro. Everybody got it. So if you needed to write it down or take a screenshot, this is the perfect time to do that. Write it down or take a screenshot, okay? I'm going to close this out. Oh, wow. That's awesome. That is awesome. Okay. So let's go. So we talked about, I just closed out TikTok so that way I can focus. Because looking at multiple screens, it distracts me big time. It really does. So let's go. All right. So standard, mini, micro lot. We got it. Okay, cool. So what I want you to pay attention to is this column that says volume, because this is going to be our lot size. Meaning when we say, hey, I want to enter a trade, the broker is going to require you to put in a lot size. Lot size means your bet. How much money do you want to put into the market? I'm going to show you how to calculate this so that way you know this is the dollar amount. This is the euro amount. This is the pound amount that I'm putting into the market, okay, to take this trade. So we want to look at, this is our lot size. And then this final column is our, in our case for US, this is our dollar amount per pip. For my people who are like, Leona, what is a pip? And I need you to go back, check this out. Go to the series that is titled blueprint for success, right? Your FOREX blueprint for success. I went step by step over pretty much the basics pertaining to FOREX to help you trade smarter in 2025, okay? Because the amount of time I've been on here, I just want to keep this down to like an hour or less, okay? So this is telling us the dollar amount per pip point, okay? So this is our bet. All right. I want you to think, if you're saying, hey, I'm only comfortable with losing like $25, then guess what? You need to stay in this lane. Stay in this lane. This is your lane. When you say, hey, I'm comfortable with losing $100 or more or so, you might be able to stay here. Okay. These two will be your lane. If you're at like $100 or more, you'll be bouncing between these two. Okay. If you have a very large account and you're like, hey, I can afford to lose possibly like 10,000. Well, I wouldn't even say 10,000. You know what I'm saying? Like I'm in the thousands. Okay. You know, then you may be here. And that all depends on the number of pips that you're talking about. But here's what I want you all to get. When I say you're comfortable with like losing $20 or $50 or something, staying here is going to be helpful, but you also need to think about the account balance you have. Remember, y'all, as a beginner, before we get into these examples that you see on the screen, as a beginner, you need to make sure that you are only risking 1% of your account balance. This is why, me personally, I tell people to not start with less than $1,000. You do not want to start with less than $1,000 because it will take forever, or it could take you a very long time to build up that account if you are following the risk management plan that you have established, and as a beginner, only risking 1% of your account. Everybody got it? So if I know that I'm staying in this lane, this means if my lot size is 0.01, remember, volume is lot size, okay, in Forex trading. 0.01. That means for every pip point that the market moves either in my favor or in opposition, that is 10 cents. Everybody follow right here. 10 cents per pip, 10 cents per point in our favor or in the opposite direction of our position. If I am saying that I'm okay with risking $100, $500, whatever, then I may, depending on how many pips, I may be in the mini lot, okay? That means my lot size will start somewhere, but start at least 0.10, okay? 0.10. That means that this is going to be equal to $1 per pip, $1 per point. I need you to think about this, because if we go to $100 account, can you truly afford $1 per pip and still be in alignment with your risk management plan that says I'm only risking 1% of my account on a trade? The answer is no. If you thought, well, no. This is where new traders mess up. I did it for a very long time until I finally understood risk management as it pertains to trading, right? So that's the mini lot. Standard lot. Your lot size will start with 1.00. It could be 2.00. If it's 2.00, instead of it being $10 per pip, that is equal to $20 per pip. If it says 5 points, so you see these people doing these screenshots and they're saying, oh yeah, I made $25,000 today. I sure hope that's a live account. Because if you're showing people, oh, I put in a standard, right? I put in a 5.00 lot size. That's $50 per pip. You better not be doing that on some $25,000 account? You better not, because that's definitely not in alignment with your risk management plan, which is 1% as a beginner. Okay, so let's get to it. Everybody got this. I hope y'all got this. So micro lot, 10 cents per pip, bare minimum. Mini lot, $1 per pip, bare minimum. Standard lot, $10 per pip, bare minimum. That is the lowest you can go with those lot sizes. If you got it, please let me know. Say, yep, I got it, Leona. Type, I got it, Leona, in the chat. If you're watching the replay, you can still type, I got it, Leona, in the comments, okay? I'll check you out later, okay? So let's go. Let's do these numbers. Let's get into these examples, because that's what you want, right? You want the examples, so let's go. So we're going to talk about having a $100 account balance. Now, there are people that say, yeah, you know, you can start with $100. But what they don't tell you is, as a beginner, you should only be risking 1% of your account. 1% of a $100 account is how much money? Type it in the chat. If you're watching the replay, type it in the comments. I'm giving you a minute to type it before I say the answer. 1% of a $100 trading account balance is what in dollars? What number is that? Type it in the chat. Type it in the comments. Sorry, y'all, I can't see your comments because I'm on Zoom, not StreamYard right now, but trust me, I'll check it out. The answer is $1. This is why I do not suggest people start with $100. Okay. So now that we have that out there, we're gonna give an example. So let's say you're preparing to enter GBP USD for a buy. Your potential stop loss will be 30 pips from your entry. So you're planning to buy. You see there's a strong support. Prices bounced off that strong support and gone up. Sorry, y'all. Prices bounced off that support and gone up. So you're going to set your stop loss before that, below that. And now that's about 30 pips from where you're about to enter at. Okay, cool. So we know our stop loss is 30. And we have established an area, right, where price has been multiple times. And we said, oh, that's 65 pips from where I'm planning to enter. Cool. So now we have a 65 pip take profit, TP, profit area, whichever term you want to use, right? We have that established. So now we know our lot size is going to be 0.01 because, hey, I'm following my growth chart, okay? I have a FOREX growth chart, and because I have a $100 trading account balance, my FOREX growth chart says that my lot size must be 0.01. Got it. Okay, cool. So now you're going to multiply. We do our potential loss first. Again, for my people, if this is your first time listening to me, the reason we calculate our loss first, because it's easier to make a decision to take the trade or not take the trade when you see in your currency how much you stand to lose. You can now say, I'm comfortable with this loss. It's not going to make or break me, or that's too rich for my blood. Let me reel it back. Or just go to trade something else, okay? Everybody got it? So we're going to multiply 30, which is our stop loss, 30 times our lot size, which is 10 cents per pip. Remember, 0.01 is 10 cents per pip. So we're going to multiply 30 times 0.10. That's going to give us the number 3. So that means we are risking $3 to enter this trade. Am I comfortable with risking $3? That's the first question. Am I comfortable with risking $3? Yes. Okay. Is this risk amount in alignment with my risk management plan based on my risk, my percentage risk per my account? If my answer is yes, then now I proceed forward with calculating my profit. If my answer is no, don't move forward and calculate the profit. Let it go, because you're now going to tempt yourself to go against your risk management plan. Why am I saying that? Because I did it. I used to do it. If it is not in alignment with your risk management plan and you're saying, hey, I'm a beginner, I'm only risking 1% of my account, I am not taking this trade. So there's no need for me to calculate what the potential profit is. Don't tempt yourself. Move on. Everybody got it? Okay, cool. So now I'm going to, let's say this is part of my risk management plan. It is 1%. Now I'm going to go move forward with multiplying my take profit pips and my lot size, because now I want to see how much I stand to gain versus lose. Okay. So now we're going to multiply 65, which is 65 pips for our take profit. We're going to multiply that by 10 cents again. So multiply 65 times 0.10. That gives us $6.50. So that tells me I have a risk to reward ratio of at least 1 to 2. If everything lines up, then guess what? I can take the trade. If there is a no in there anywhere, do not move forward. Now, I have a question for y'all. In this example that I just gave, with everything I just shared, and you are a beginner, and you can only risk, you should only be risking 1% of your account balance on a trade. Is this trade in alignment with your risk management plan? Yes or no? Type that in the chat. If you're watching the replay, type it in the comments. Is this, what you see here, in alignment with your risk management plan when you say, hey, I'm a beginner, I'm only going to risk 1% of my account balance on every single trade. Each trade, I'm only risking 1% of my account balance, and that is it. I'm not moving forward. I'm saying this over and over again because I need you to get it. Repetition is how we learn. If your answer was no, I would not take this trade, then you will be absolutely correct, because you are now risking 3% of your account and you are new. That is the wrong answer. This is where a lot of new traders get caught up and they end up blowing accounts because they do not understand risk management. That was me. Hence why I blew so many accounts. I didn't understand. I'm like, they told me I could risk 3%. But this is why I was blowing accounts, because I didn't understand, and I should have, as a beginner, as a very new person that's never ever traded before in my life. I should never have started out trading 3% of my account balance. I should not have been starting my account balance with $250. That's what I initially did the first time. You know why I did those things? It's not their fault, but they encouraged it. Yeah, man, you can start with $100. You know what I'm saying? Yeah, man, you know, like you could do 1 to 3%. Not one time was anyone that was teaching me in those first few years of me trading, none of them ever said repetitively, none of them ever said, as a beginner, you should only be risking 1% of your trading account balance on any given trade. Do not go above that until you see consistent profit. And that's something you have to decide. But until you see consistent profit, not just in your demo account, but you need to see that same consistent profit in your live trading account. Before you can go to 2%, you need to see consistent profit at 1%. Everybody got it? Okay. So now we're moving on from the $100 trading account balance. We're going to move on to $1,000. So remember I said I personally would not suggest anyone start with less than $1,000. I would say start higher, but you do what you can do. Okay. The $100 is available, you know, but just so you all know, The risk that you should be taking when trading on a $100 trading account balance is $1 per trade. Who wants to go in the market and I'm working for $1 per trade? Nobody. Nobody. But now, if that's all you can start with, that's all you can start with. But don't expect large numbers because you're only risking what? $1. That's it. So your max pips, depending on what you're trading, can only be 10 pips. Okay? Just so you know. You should not be going above 10 pips. You should not. All right, so let's go. 1,000. So let's say your account balance with your broker is $1,000. All right, cool. You're preparing to enter a trade for USD JPY, and you're like, yep, it's selling. I want to drop down in that sale. Okay, I want to jump into that sale. So your potential stop loss is going to be 45 pips. You have your reasons for that being 45 pips. Okay, cool. Now you have a profit area, your TP, your take profit, whichever term you want to use. That's going to be 90 pips. You have your reason for that. All right, cool. So now you're saying, hey, listen, my FOREX growth chart says that my lot size for my account balance and for this number of pips for my take profit and stop loss should be 0.15. 0.15. So 0.1 gives us a mini lot. We automatically know that that equals $1 per pip. If it's 1.5, that means it's equal to $1.50 per pip. Everyone got it. 1.5 is equal to $1.50. If you do 0.20, that equals $2 per pip. If you do 0.30, that's $3 per pip. If you follow, type I follow, Leona. I'm saying this stuff over and over again because I want to make sure y'all got it. Okay? And I'm going to hurry up. Okay? Because I've been on here a little long and I have to go pick up the ladybug here soon. Okay, cool. So now we know that. Got it. So we know that it's $1.50 with a 0.15 lot size. Cool. So now we're going to start with our stop loss first. Remember, we always calculate what we stand to lose first in order to see if, number one, can my heart take that? Or am I going to have palpitations? Okay. If I'm going to be fine, cool. Number two, we want to see, does this line up with our risk management plan? Meaning, if I'm only risking 1% of my trading account balance, does this lot size afford me the opportunity to only risk 1% of my trading account balance? Got it? If the answer is yes, then you move forward with calculating your profit. If the answer is no to that second question, then you stop. Don't calculate the profit. This is for my people who are probably just not joining. I'm going to say it again. You calculate your stop loss. Your number one, is this stop loss in my currency amount? Is this comfortable for me? Am I cool with losing this? If my answer is yes, then I think, is this in alignment with my risk management plan? Meaning, if I'm only risking 1% of my account balance on a trade, does this amount equal that? If my answer is yes, then and only then do I move forward with my calculation of my profit. If the answer is no, do not move forward with calculating a profit. Why, Leona? Because you're going to tempt yourself to go against your risk management plan. I'm saying this, y'all, because I've done it. I did it. Guilty, Your Honor. Again, y'all, with these series, I'm sharing with y'all stuff that I did. And I don't want y'all to go through it because it sucks when you blow account after account and you're like, what the heck? I know how to trade. It's not that you know how to trade. It's I got to get risk management under control. I got to get my emotions under control. Right? Okay, cool. So now we got that part out of it. So now we know it's $1.50. So first we're going to multiply the 45 pips for our stop loss. So we're going to multiply 45 times 1.50. That's $1.50. That gives us a $67.50 stop loss. Everybody got it? Okay, cool. So if this is in alignment with your risk management plan, then you move forward with calculating the profit, which is we're going to multiply 90 pips before I take profit. 90 times 1.50, $1.50. That's going to give us $135 in profit. That means, okay, I do indeed have a 1-to-2 risk to reward ratio, so I can move forward. This is only if there's a yes 2 times when it comes to calculating your stop loss. If there is a no, then guess what? You don't move forward. You don't calculate the profit. Now, I have a question for y'all. Again, we know as beginners, you're only supposed to risk 1% of your trading account balance. With what you see here, is this in alignment with your risk management plan? Type yes in the comments or in the chat if you're saying, yes, it is, Leona, or type no if the answer is no. If you're saying the answer is no, Leona, this is not in alignment with my risk management plan, you will be absolutely correct. What is 1% of $1,000? That's $10, y'all. It's $10. That's all you can risk on a $1,000 account when you're new and risking 1% of your account. This is 6% of your account. That's above people who are making millions of dollars trading as retail traders. I only know a few retail traders that say, hey, my max is 5%. So you as a beginner are risking 6%. And you're wondering why I'm not making any money. Or I'm wondering why I'm blowing accounts. This is why. Everybody got it? I hope I'm helping you. If I'm helping you, if this is making sense, give this live stream, give this replay a thumbs up. If you're like, oh my gosh, Leona, I did not think about that like that. Like, yeah, I've definitely been risking way more than I said that I want to risk. Like, oh my gosh, give it a thumbs up and also share. Because trust me, if you're feeling like that, there's someone else that's trading right now. There's someone else that's investing in different markets, stock market, crypto, real estate, whatever. They are overextending themselves. They are risking way more than they're comfortable with losing. And they don't even realize that they're doing it. Share with 1 to 2 people, okay? All right, that's it with that part. Now we're going to move on. We're going to move on to risk to reward, okay? And then we're going to wrap this up here in a second because I'm going to give you a few things. We're going to get a couple of examples, and then we're going to wrap this up, okay? So bear with me, y'all. Bear with me. So if this is making sense, y'all, let me know it's making sense. Give me the thumbs up and also share. All right, let's go. So risk to reward, what does that mean? You see it on the screen, okay? All this is a way for us to identify our potential loss, which we say is risk, and also to see what our potential trade, our potential gain is going to be, okay, which is our reward. Everybody got it? All right, I got to hurry up, y'all. So here's why this is important. Number one, it ensures profitability over time. So even if you have a 50% win percentage, you still have a chance of having profit at the end of the week or at the end of the month, okay? As long as you are using at least a 1 to 2 risk to reward ratio, okay? The second reason why it's important is because it encourages discipline in our decision making. We will only take the trade when it matches our risk to reward. We're not finagling it. We're not saying, oh, well, no. Is it 1 to 2? Is it 1 to 3? Yes or no? If the answer is no, we move on to something else, or we just don't trade that day. Got it? Okay. Number 3 is it minimizes impact of loss. When you have a favorable ratio, this ensures that even if you have a few winning trades, that still can offset multiple losses. So the higher the risk to reward, the more losses you can take, but still in the week, in the month, in the year in profit. Okay. So you're still going to be able to grow your account. Now, this is how we're going to use it. We're going to think about this and identify our risk to reward before we even enter a trade. We need to calculate the potential risk first, and then we need to calculate the potential reward. We do that based on our stop loss pips and our take profit pips. Okay. We only take trades where the reward outweighs the risk. So at a bare minimum, y'all, 1 to 2 is it. We don't do one-to-ones. I don't tell anyone to do a 1-to-1 risk to reward ratio. I stopped that when I saw that it wasn't working for me, because guess what? I was taught that. I was taught that 1-to-1 is okay. 10 pips and dip. I was taught that. Wrong answer. Wrong answer. Because there's there's no long-term success that's going to come with that. All right. So at a bare minimum, we want 1 to 2. The higher, the better. Okay. Now, what does this mean when we're talking about the risk to reward? Again, every single dollar that you put into the market, you're expecting to make either double, triple, quadruple that, right? That's the goal. So if I'm saying, hey, my risk to reward is going to be at a bare minimum 1 to 2, that means for every $1 I put into the market, I'm anticipating getting 2. So if you're risking $50, right, you should be seeing an opportunity to make 100. Okay. And if your win percentage is 50%, guess what? You still can end in profit either that week or that month. Got it? Okay. So now let's say, let me move this out the way. Let's say a trader has taken 8 trades. You see this on the screen. I need y'all to screenshot this, because this is going to help you moving forward to calculate your net profit or loss, okay, for the week, for the month, for the year. Got it? Okay. So let's say a trader has taken 8 trades, but they've won 3 of them. They have risked $30 each trade, and then they have gained $60 each trade. So that was their goal, was to at least gain $60 when they're risking 30. But that's what they got. $60, give or take, for each trade that they won. Their risk to reward ratio has consistently been a 1 to 2. So here's how you're going to calculate their net profit or loss. All right. You're going to multiply trades won times reward per trade, meaning trades won 3 times reward is 60. So 3 times 60. Everybody got it? You're going to get that number. Then you're going to subtract that by the trades lost times the risk per trade. Well, 8 minus 3 is 5. Okay, cool. So that means you lost 5 trades, and that's at $30. So you're going to have 5 times 30. So you're going to subtract the first one here by subtract it from here. So trades won is your number of successful trades. Trades lost are the trades you have taken minus the trades won. Reward per trade, that's your profit in dollar amount, euro amount, pound amount, whichever one. Okay. Your risk per trade is the amount you risk per trade. That's still your dollar, pound, euro amount. Got it? So in this example, we're looking at it. Net profit or loss is 3 trades won times 60 is the gain, minus 5 of the trades lost times 30, which is what you risk in dollars. That is 180 minus 150. That equals 30. So that means the trader ends with a net profit of $30. Does everyone have it? This is how you know if you are ending in profit or you're ending the week, the month, the year in loss. Everybody got it? I hope y'all do. I really hope y'all do. Okay. So last one, and then we're going to go. We're going to wrap this up because I really have to go. I got to pick up the late bus. So we're going to go big or go home. Or are we? Okay. So I got the line size chart up here again so that way you all can see it. So now the question is, you are considering entering Euro USD with a standard lot size of 1.00. Your stop loss is 15 pips, and your profit area, your take profit is 45 pips. Your account balance is currently 2,000. I was going to say 2024. $2,024. Okay. I want you to confirm if this is the correct stop loss in dollars, and confirm if this is the correct number of take profit in dollars. I need y'all to do it right now, real quick. And I'm going to cut my camera off. Type it in the chat for those of you watching live, and then type it in the comments for those of you watching the replay, okay? Is this number correct? Type the number that you got when you calculated. Remember, y'all, let me go back. Let me go back. Uh-oh. Where is it at? Right here. Remember, you multiply your stop loss number in pips times the lot size. Remember, that's $10 per pip, right? So you're going to multiply that 15 times 10. Then you're going to multiply 45 times 10. Okay? 15 times 10, because this is a standard lot size. 45 times 10, because it's standard lot size. Okay? And I need you all to type in the chat if you're watching live, or type in the replay, or type in the comments if you're watching the replay, what number you came up with for the stop loss dollar amount and the take profit dollar amount. Okay? I'm gonna give y'all a second. All right, what y'all got? What y'all got? Because I'm about to answer. If you put 150 in the chat or in the replay, in the comments, I don't know where I say that. In the comments, if you're watching the replay, then you will be absolutely correct. Okay. Your stop loss in dollars is $150. If you put 450 in the chat or in the comments, for those of you watching the replay, you put 450, then you will be absolutely correct. Okay. So I already put it on here. The risk to reward is 1 to 3. Okay. 15 times 3 gives you 45. Now here's my question. Again, I'm gonna give y'all a minute to type it. Is this a good or bad risk? And then why? I want you to type it in the chat for those of you tuning in live. And I want you to, for those of you tuning in on the replay, is this a good or bad risk? And why do you say it is a good or bad risk? I'll give y'all a minute before I give y'all my answer. Now remember, y'all, this is for a new trader. Remember, as a new trader, you should only be risking 1% of your account balance on a trade, on each trade. 1% of your account balance on each trade. So again, is this a good or bad risk? Then give me why it's a good or bad risk. Okay? I'm giving y'all some time to type. Giving y'all some time to type. And then once y'all finish, I'm going to give y'all my answer. And of course, I'm going to tell you why. Okay? So hopefully you typed it, because if you've been tuning in with me and you are a model student, then you know the answer. And you was like, shh. Okay? You was like, ah. All right. So here's the thing. This is horrible. It's horrible. It's a bad risk, y'all. Why, Leona? I got it. The risk to reward is 1 to 3. I got it. 150. You may be cool with losing $150, but guess what? 1% of this account is $20. So you cannot risk, should not risk more than $20 on a trade. As a beginner, that's only risking 1%. Y'all, you are risking almost 8% of your account balance on this one trade. That is almost double the amount of people who are making millions of dollars from trading in the foreign exchange market. And they sit here and they say, hey, my threshold, my ceiling is 5%. Now I'm gonna tell you something. My threshold, my ceiling is 3%. I'm not at 5% yet. I guess I gotta graduate today because I'm not at 5%. I'm my heart is still at 3%. Okay, like hey, I'm comfortable. I'm good there. You know what I'm saying? Right. I haven't graduated to that, and I may never graduate to being comfortable with risking 5% of my account balance. I don't know, but listen, you're almost doubling people who are making millions of dollars. That's not good. Okay, that's not good. All right. So hopefully this exercise helped you all. Hopefully it helped you. Okay. So we're gonna wrap this up because I really have to go. Like in 5 minutes, I have to be gone. So let me wrap this up. So if this exercise helped you, sorry. If this exercise helped you, y'all, please, number one, give the thumbs up, thumbs up, thumbs up. Hopefully you took screenshots as well. And share. And also hit the subscribe button. If you find this information helpful, if you find this YouTube channel, the content here helpful to you, subscribe. That's your way of supporting, y'all. That's free. A subscribe is free. A thumbs up is free. Okay. And also hit that notification bell so you know when I'm live again. All right. So let's go into the last pieces. And we want to talk about some of the common risk management mistakes. All right. Real fast so I can wrap this up. Number one, over leveraging. Over leveraging just pretty much means, listen, as a trader, you are using excessive borrowed capital. Okay. You are pretty much saying, hey, I know I have this amount of money available to me, but I'm maxing that thing out. We don't want to do that. Here's why. There are some dangers to over leveraging. Number one, we have amplified losses. Leveraging magnifies not only potential profits, but also losses. All right. A small unfavorable price movement can result in a significant loss. If you are not paying attention to the news and you enter the trade and you are buying and then something happens and it's not in favor of your country, or of that country, and then price just plummets and you don't see it, you don't have a stop loss set, guess what? You may have a blown account. We don't want to do that. There's also lack of flexibility when we talk about over leveraging because positions leave a little room for price fluctuations. Okay. You have more room for price to do its thing when you have smaller risks. All right. Margin calls. If you are like, I don't know what margin is, y'all write down the word margin, write down the words margin calls, and go to Google, go to Chat GPT, because there's no excuse, y'all. We're in 2024. Technology is at our hands. Chat GPT is free. Okay? Put in what is margin calls in Forex trading. It's going to give you a whole breakdown. You can even ask it to tell you, explain it to me like a fifth grader. Okay, or explain it to where a fifth grader can understand. Y'all, it don't matter. But with margin calls, though, high leverage increases the likelihood of margin calls. This is where the broker is going to require additional funds to keep your positions open. So that means if you're in multiple trades, they may close out some of those trades to keep you in the other trade. Okay, if you can't meet the margin call, all your positions may be closed, and that's going to be closed at a what? Loss. All right. Last thing, with over leveraging, the danger of over leveraging, y'all, there's psychological pressure that comes with that. Okay. Large leverage positions increase emotional stress. This is going to lead to more impulsive decision making. It's going to result in like that FOMO, panic trading. Okay. This is going to just blow up those losses even more, which could potentially cause you to blow your account. Okay. So how are we going to avoid over leveraging, y'all? Number one, we're going to use lower leverage ratios. I know that there are some brokers, especially these unregulated brokers, that allow you to do a 500 to 1 leverage. Y'all, stick to 100 to 1 or lower. Okay. Now, the lower the leverage, the more capital you're going to need. I know that may be an issue for some people, but like I said, y'all, trading smaller accounts, you already see the numbers. Okay. It's not worth it to me. It's not worth it to me. Knowing what I know today versus what I knew in 2020, it's not worth it. Okay. So either do your lower leverage and make sure you have more capital. That if that means budgeting, saving, you know what I'm saying? $50 here, $100 there, and then putting it into your broker account, that's fine. But y'all, please, please use lower leverage. Don't do that 500 to 1. Stay away from that. 100 to 1 or less. The lower the leverage, the more capital you're going to need. But I'm telling you, that's going to help you in the long run. Number 2, the second way we're going to avoid over leveraging. Number 2 is to keep our lot sizes appropriate for our account balance. We've already said that. I've given you multiple examples, and especially as a beginner, your risk percentage of your trading account should only be 1%. Do not go above 1%. If you want to do 0 or 0.5%, that's fine. Just don't take your tail above 1% as a beginner. Everybody got it? I'm gonna keep saying it to make sure you got it. Okay. Number 3 is make sure that you always set a stop loss when you are entering a trade. This is gonna limit your potential losses, but also protect your capital. Okay. Y'all, over leveraging is a common mistake that a lot of new traders really do make. And it can really lead to blown accounts super fast. Okay. So by understanding this risk and managing your leverage responsibly, you as a trader can avoid these catastrophic outcomes, right? And trade will get greater confidence. Okay. So we're gonna go on and give you your homework. Oh, my bad. Before I give you your homework, listen. Do not ignore using your stop loss and do not risk too much per trade. That's what I want to leave you with. With everything that I share with you today, those are your 2 key takeaways. Make sure you use a stop loss and make sure you are properly calculating your potential risk first before you do anything else. Those are my 2 key takeaways. Okay? 2 key. Bonus is, as a new trader, you only risk 1% of your account balance on any given trade or less. Okay? 1% or less. All right. Now, homework assignment, y'all. Homework. Okay, I got to go. Homework. I need you all to practice risk management. Practice calculating your position sizing, your lot sizes, and your currency to see what you could potentially lose, then what you could potentially gain. Do this over and over again with multiple scenarios, okay? Make sure you utilize your stop loss in your demo account for every single trade. No exceptions. Don't say, oh, well, because... No. Stop loss. Everybody got it, okay? So, in summary... My army battles will get it. All right, in summary, hopefully you all have a better understanding of how important risk management is, specifically knowing your lot size, stop loss, risk to reward, and how they all impact your trading account and could potentially either stifle your growth or propel your growth, okay? So I need you all to adjust your risk management plan to make sure it's in closer alignment with what you have shared, what you have learned today, what I've shared today. Complete the homework and annotate the results in your trading journal. Okay. All right. So part 3, we're going to go into a deeper dive into market analysis. If time permits, I'm going to go over, how we can work on mastering our emotions and, of course, discipline. All right. If you have been finding this series and in particular this lesson helpful, please press the thumbs up. Don't forget to share, comment what you took away from this, what was helpful to you, and of course, hit that subscribe button because that's a really great way to support, as well as hit that notification bell so you know when I'm live again, okay? I really have to go, y'all, because I have to pick up the ladybug. I will go into everything else. Black Friday is coming up. I have a sale. It will be in the description of this video later on. Please make sure if you really want to learn how to trade with me, there are going to be different programs that can fit your budget and also your expertise, your level of understanding as it pertains to trading in the foreign exchange market as well as in the cryptocurrency market, okay? You can click the link in the description of this video. There's going to be a phone number you can text to be added to the wait list. So if you want to be part of the early Black Friday sale that starts for people that's part of the Prosperity Cause community, that starts tomorrow. If you want to be part of that, you need to text that number today, okay? So that way you can get the notification and you can be part of that sale early, all right? So that's it. That's all. Y'all have a really great day. Do what Arthur Ashe said, and then start where you are. Use what you have, and do what you can. Y'all have a really great week, really great weekend. Hopefully, I see y'all on Sunday for the live market analysis.